Hey everybody, welcome back to the channel. I hope you're doing fantastically well. So I've got a few updates on some prop firms with some changes to their rules, which I think has gone a bit under the radar for a lot of people, definitely myself included. I've got a funded account with Blue Guardian, and I don't recall seeing a message or email come through to actually tell me about this change of rules, although it is actually on the Discord channel and on the FAQs on their website. But it's not just Blue Guardian who's done this. I've also seen it on Funded Engineer and MyFlash Funding. Now I know there are some synergies between these firms that could have actually introduced that rule across all of them as a blanket rule to start with. I'm not sure how it will affect other prop firms where they actually start adopting this rule as well. And essentially the rule is around news trading, and it doesn't allow trading or profits to be taken if you are trading within a 2.5 minute window of any red flag news items. But what I don't get is what is flagged as a red flag news item. Now, could you be looking at Forex Factory Calendar and as any item that's a red flag, or is it just high priority ones like what FTMO do, where they actually designate in their particular week the particular high volatile news events that are going to come out and the instant you cannot trade between them? What I'm seeing here is almost a blanket rule across the board that says, okay, if we deem there's a high volatile news article coming out, you cannot trade or take profits 2.5 minutes before and 2.5 minutes after. It doesn't tell you what you can trade and exactly what news articles come out. There's nothing on the dashboard that actually says this is a restricted news article and this is where the rule violations will happen. Now again, this is only for funded accounts, doesn't affect anything in the challenge phases, but also it doesn't actually even include a rule violation. The accounts will not be terminated from what I understand at the moment. What will happen is any profits that you gain during this window, then they will be deducted from your accounts. Now, I'm not sure if any losses will be deducted from the accounts in exactly the same way. That's still one to be seen, and we'll see how it evolves over the next sort of few weeks and months. Now, there are two reasons why prop firm introduced this particular rule. One is to protect the traders, because we do know actually at high volatile news events, we see a lot of people blowing their accounts, and therefore we have that ability to actually restrict people from trading and not taking those profits or even losses. Then that will hopefully stop anyone actually blowing their accounts. But what I deem this more likely is what it's going to be doing is allowing the prop firms to reduce payouts to people. Effectively, if you are making very large payouts around news, you're doing a lot of high frequency trading around these news articles, or even larger lot sizes or trade sizes, your profits will be significantly higher on these high volatile events as if you're just doing normal swing trading or trend trading over the course of a day. So I can see definitely for me the advantages is here for the actual prop firms to reduce payout profits to traders, which for me is not ideal. Now this has been an FTMO rule all the way through. It's always been very clear and very understandable. Now what FTMO did to get around this one to allow traders to actually trade the news is allow a swing account and actually a significantly reduced amount of leverage. So as an example, you can't go in, let's say at 20 lots on gold or 50 or 100 lots on some of the Forex pairs, which a lot of people do. Now, with these other prop firms, they're still at 1 to 100 leverage, and therefore, if they're going to be maintaining this rule going forward, that then allows people to still be doing massive trade sizes. So I think if they're going to be able to get around this, they're definitely going to have to do a different leverage on some of the account options. So will this have an impact to all the other prop firms? I don't think so right now. I think a lot of people will start to monitor and see if it actually impacts their business model, but also a lot of the other prop firms out there will look at Funded Trader Plus or the 5%ers that actually have a reduced amount of leverage anyway, that actually would stop people doing massive amounts of trading or huge trade sizes around high volatile news. So it's really interesting to see the prop firm space is constantly evolving, constantly changing the rules and the parameters which people can trade with. But ultimately, once you know the rules, once you know how to work within the rules, you can actually trade effectively and still make some good profits. So make sure you leave a comment down below, let me know any questions or any thoughts you have on this one, and I'll do my best to respond to all of them. And as always, make sure you subscribe and give the video a big thumbs up. Thanks for watching, cheers.